To big cap technology, Apple shares continuing to slide following Warren Buffett and Berkshire Hathaway slashing its Apple stake by about half. Tom Forte, Maxim Group senior consumer internet analyst, joins us now. Tom recently raised his price target on Apple to 203 from 195. Keeps a hold rating on the name. Tom, great to have you with us.
Thank you for having me, Melissa.
What do you make of? I mean, some people just say it's just risk management, and it may very well be, but Buffett really has sold well. I mean, he sold, according to the filing, during the big run-up in Apple shares. And he also was selling Bank of America, which I know you don't cover, but altogether, he's selling pretty well. So how do you take this sort of signal if it is?
Yeah, so I do think it's a signal. So if you look at shares of Apple, they're trading at about a 30 times multiple on the out year from a PE standpoint. And what does success look like on an AI upgrade cycle? Success looks like mid-single digit to high single digit EPS growth. So you're looking at a PEG ratio of 3 to 6 times. So I think the stock's ahead of itself. There's a huge opportunity here for an upgrade cycle for AI. We think it'll be half as big as the 5G upgrade cycle. For example, they're going to have to navigate regulatory challenges in China, which is about 19% of sales, and Europe, which is about 25% of sales. And we already know they're going to do a staggered launch to the extent they're going to have new hardware, or we're going to wait for the new software for the full impact of Apple Intelligence. So Warren Buffett's moves make a lot of sense to me right now.
So in terms of where the stock price is at this moment, 209 or so, do you think that it's pricing in that sort of degraded upgrade cycle or lowered expectations for an AI-charged upgrade cycle? You mentioned that you're pricing in about half of what Wall Street is pricing in. In China, it's not just regulatory issues. They don't have an AI offering in China, and they will not unless they probably partner. So it's not just a regulatory issue they have to navigate. It's a whole AI offering that they have to figure out.
They may never have a true Apple Intelligence in China. So they may run into the same issues that Meta and Google have run into in China. So I do think that the market's still ahead of itself. If I'm projecting the 50%, I feel like the market's projecting a full 5G type upgrade cycle, and that may not happen.
At the same time, Tom, relative to other big cap tech stocks, particularly the Mag 7, is Apple, in your view, the most defensive? I mean, it may just be the cash cycle. It may just be, the services revenues. I don't know. That's the way it's being treated, at least in this pullback.
Yeah, from a balance sheet standpoint, it clearly is the most defensive. So Apple has the ability, still generates $100 billion in free cash flow to continue to buy back shares, irregardless of what Warren's doing. And yeah, they're easily the most defensive name in the Mag 7.
You mentioned the multiple. I mean, does that give you pause at this point?
Yes. So when you look at Apple, they just came off 5 consecutive quarters of declining revenue growth. If you unpack their guidance for the September quarter, they're projecting iPhone revenue growth for the first time in a while, and the market is still valuing it at high 20s, low 30s PE, and I think that does give me pause here.